At William O'Neill and Company joins us to talk about the way forward for global equities and how and whether or not India features at the top of their list. Dean, thanks so much for joining us. We were just reading a piece by Jefferies a while back where they spoke about how in the next 10 years, if they had to pick one market to invest into, it would be India. Would that be your view as well? And how does your pecking order look like for the start of 2022?
Yeah, I would agree with that. First of all, thanks for having me on again. I think India is a fantastic market. The economy is really vibrant, and when you're looking at, for example, the middle class income rising, financial sector, household debt to GDP really low. So there's a lot of opportunities for growth. So I think the market is set up very well in going forward, as long as oil prices kind of remain where we are now. It doesn't hover over 100. US dollar doesn't peak out. I think it would be in that Goldilocks type scenario for India. I am noticing, however, that a lot of the stocks are extended. So, for instance, India rail catering, which was about 100% over the 200-day moving average maybe a couple of weeks ago, had a climatic top, and now it fell through 21-day moving average, but it's resilient. It bounced back, and it's testing support again at the 21-day. There are other stocks similar to this, like Indian Energy Exchange, Avenue Supermarts, Titan. All of these stocks, you could see kind of a climatic type action, pulling back to moving averages, and most of these stocks are finding support at the 21-day moving average. But what I would say is, if you're looking to own these shares, I wouldn't create new positions here. Let it base and form a new base, and you'll find a better entry down the road. But besides these extended stocks, we continue to see plethora of nice ideas, particularly in consumer, FMCG area, retail. So some of the names in FMCG, we like Relaxo Footwear, Tube Investments, even auto parts companies like Mahindra Automotive, Endurance Technologies, Blue Star. We are noticing that they are coming out of a base formation and breaking out into the pivot zone. Now, in terms of financials, we continue to like financials. We have HDFC Bank, of course, as well as ICICI, Kotak Mahindra. But then we are seeing new names like Cholamandalam, their consumer finance company. So these types of stocks are now breaking out from a base. So
yeah, sorry. I mean that's a great set of stocks and gives a great idea about how you're thinking. On the Nifty itself, the benchmark index, Dean, any thoughts, levels, etc., that you want to point us to? I mean, the Nifty is down 650 points from its all-time high. That's about 4% or so. We are at 17,865 as of yesterday's close. Where do we find support?
Yeah, I would say, look for support at around the 21-day moving average. Right now, distribution day count in India is sitting at 4, which is not bad. So, we want to make sure that distribution day count doesn't elevate from here. But so far, it's looking like it's holding in there fairly well. But like I said, once you see distribution days start to pick up and we get up to 6, 7, 8, that's when, we start to get nervous and start to take ideas off the table. But so far, I think it's holding in there.
Okay. Dean, you're talking about, a lot of parts of the market where one needs to start getting a little cautious. What looks most vulnerable to you? Would you at all think of, taking any contra positions on the short side?
I think, I did notice a lot of the tech names, such as Infosys, Tata Consultancy, they're starting to break moving averages. Tata Consultancy is down below 100-day moving average. It's probably going to go and test the 200-day moving average. So, I would say if you see names, start to break below the 100-day moving average with volume, that's probably an area where, you ought to be cautious. And if you want to put short positions, that's probably the spot to do it, particularly at the 200-day moving average. If you see, some of these names crack below that, then that's a definite sign that, they're probably going to head lower.
Okay. In terms of individual sectors for the next year, I mean, since we're at the fag end of the year, I'm just sort of, getting a longer term view. Which are the sectoral leaders according to you? Will it be financials? Are you looking at metals? Where do you see the leadership emerge from within India?
Yeah, I would say definitely financials is one area, because if you look at globally right now, a lot of the banks are breaking out. So it's basically, we have this longer theme of reflation across the globe. It started with the US banks started to break out. In Europe, we're seeing banks breaking out. In Asia, particularly, I would say Indonesia, Japan, Singapore, and of course, India, they're all breaking out as well. So what we're noticing is, as COVID pulls back and economies start to open, you're going to see this reflation trade starting to happen. And it's put on right now at the moment. So I would be heavily positioned in financials. As well as particularly for India, I really like the retail space. We continue to see, as GDP increases into the next year, we're going to see middle class income continue to rise, and some of the retail names, I think they're going to do very well. I am noticing that Nykaa is about to IPO. That's that looks like a really interesting company as well.
All right, Dean, we'll leave it there on that note. Thank you very much for joining in and giving us your opinion on a range of stocks and, of course, the way to approach the market.